I'm not sure how modest that is, but $8 to $10 million. But as I mentioned in the presentation, there are some publicly traded vehicles. When I say publicly traded vehicles, that's to simplify mutual funds or mutual fund-like products. These are products that you can buy and sell from mutual fund companies or through even trading on the New York Stock Exchange. There are mutual funds that do give you exposure to private equities, and I mentioned business development companies, BDC, and there are maybe 20 of those or something like that trading in the United States. But that's not the sort of exposure that we think about when we think of leveraged buyouts or incredibly state-of-the-art venture capital outfits. I think that you can get other exposures by investing actually directly in the firms themselves. There are private equity firms that actually trade on the New York Stock Exchange, and that's another way to get an exposure. What you're really doing is buying a company, a private equity firm, that in turn runs a number of private equity funds, and to some extent you're getting the exposure. But what we find is that when you buy your private equity holdings through the stock market, which is what I've been talking about there, you tend to pick up the risk of the stock market, where one of the main reasons to be in the private equity space is to avoid the risk of the public stock market. So at this time, I think the opportunities for a modest investor of $8 to $10 million are rather limited in the private equity space. I think you need to get up closer to 50 million to begin to run the sort of program where you can buy into these private placements. And that's a very sophisticated sector of the market.